We're on the verge of a major economic contraction in the United States, unlike nothing we've ever experienced. There is the potential that this could be worse than the 1930s. I don't know if it's going to play out that way. It's certainly going to be worse than the 1970s. But I think it's more than just, it's not like the American economy was in great shape and all of a sudden we had the bursting of the housing bubble and an otherwise healthy economy has been temporarily derailed. And we just need a few more rate cuts or a few more tax cuts and we're going to get everything back on track. It's not going to happen. See, the problem is we had a bubble economy. And the housing market, the subprime market, was the pin that pricked it. But it's the entire U.S. economy that's now about to unravel, not simply housing. Because the problem with our economy is that for years we've basically turned economics on its head. We've based our economy on consumption, on consumer credit, on borrowing money from people all around the world, supposedly in poorer countries than ours, who have been saving while we've been borrowing, and then we use that borrowed money to buy products that they made. And they accumulate all of our assets, and we accumulate liabilities, and we have to pay them. And unfortunately now we've borrowed so much money that it's becoming obvious that we can't pay it back. And a lot of the bonds that we've sold the world, whether they're collateralized mortgage obligations, or student loans, or credit card debt, or auto loans, or whatever we've done, we can't pay it back. These securities are collapsing. The people are running away from the dollar. Even if we can pay them back, even if we can pay them back the dollars, the people around the world are realizing that they're not getting their purchasing power back. Whether they're in Europe or whether they're in Asia, the dollar is losing value against these currencies. And the dollar would be losing a lot more value if it wasn't for the efforts of foreign central banks to prop it up. And you've got global money supply now growing in many countries at 15–20% a year. And why is this happening? This is happening because all these nations have pegged their currency to the dollar. And so we're exporting our irresponsible monetary policy to the rest of the world. And the world thinks they have to maintain a relationship with the dollar because we're the reserve currency. But in the meantime, you're getting riots around the world. You've got food shortages. Prices are running out of control. In China, in Saudi Arabia, they're imposing price controls on staples. Yet their money supply is growing like crazy, and they can't make the connection between the increase in the money supply and the rise in prices. And here in the United States, we're doing the same thing. We're looking at prices going up. The government tells us that inflation is 2 or 3%. That's all nonsense. I mean, we know it's at least 10% or more. But you can look at what's happening to the price of food or the price of energy, and instead of blaming these price increases on the Federal Reserve, instead of looking at the money supply, we're trying to blame it on some external factors. We're trying to say, well, prices are rising because of economic growth, because somebody in China is eating more meat. I mean, this is all nonsense. I mean, economic growth doesn't cause prices to rise. It causes prices to fall. That's why it's so good. When you have economic growth, you get more supply. The problem is now we got demand. We got a lot of artificial demand being created by the Fed. And what's happening now, and why I said why this election is so important, is the politicians are trying to reflate this bubble. But nobody is talking about massive tax increases to bail out the Wall Street investment banks or to bail out leveraged homeowners. Nobody's talking about that. They want the Fed to bail everybody out. They want the Fed to print money as if there's no consequence. There's a lot in the news now about the stimulus checks that are getting mailed out. I mean, people think there's no cost to these stimulus checks. If the Federal Reserve wasn't printing all this money, the stimulus checks would bounce. There's a cost to this, because when they print money, they debase the value of all the money that already exists. And people are going to need these stimulus checks because the cost of providing them is that food prices go higher and energy prices go higher. But unfortunately, with what's going on right now, the free market seems to be taking the blame. What are they talking about in Congress? They want to give more power to the Federal Reserve. They're looking at the bursting of the housing bubble, and they're saying, oh, this is because we didn't have enough regulation. They're not blaming Alan Greenspan. They're not blaming the Fed. They're blaming the free market. That's exactly what happened when Roosevelt came in the 1930s. We made the same mistakes in the 20s, and we repeated them again in the 90s, and now it's the same scenario. We're blaming the free market for failures of government. Yet government price fixing, the government set the price of interest rates, they set it too low, they blew up a stock market bubble, they blew up a housing bubble, and they burst, but the government wants to reflate it. But again, the problem is we can't go back to the way we were, because I don't think the world is going to support the U.S. economy anymore. I think they've realized that we simply borrow too much money, and we can't rebuild that bubble or reflate that bubble. We're going to have to go back to a viable economy. And what's a viable economy? Well, we're going to have to start saving. The real reason economies grow is not because people consume, but because they don't consume. It's underconsumption. It's sacrifice. It's the act of not spending what you earn, putting something away. The savings is what feeds real economic growth, because savings can be loaned out to entrepreneurs who can use those savings to make capital investments. And that's what increases productivity and provides employment opportunities and goods that grows an economy. We have to go back to that, but we can't get to where we need to be from where we are without a serious economic recession. We have to start shutting down all these malls and building factories. People have to move from the service sector into real goods production, but we can't get there without a recession. The politicians don't want the recession because they're afraid they might not get reelected during the recession. So they want to pretend they can prop everything up, and they're going to do it with a printing press. And unfortunately, I think we're on the verge of a major collapse of the value of our currency. I think that the central banks around the world will soon pull the plug on these dollar pegs and let the dollar go down the drain. And I think it's going to go into a free fall. And when it does, prices are really going to start to rise. And I'm afraid that we're going to come in, and again, we're going to put price controls on goods, and we're going to try to attack the symptoms rather than the disease. And I think it's important that we have some people in Congress, or in the Senate hopefully, who actually understand that the government is the problem, that the government is not the solution, that the only way the economy can ever solve the problem, and it's not the government can't solve it, we have to solve it ourselves. We have dug ourselves into this huge hole, but we're not going to be able to dig our way out if the government is standing on all the shovels. So what we need is for the government to restore sound money. We need substantial reductions in government spending. You got even John McCain, he's talking about all these tax cuts. Well, what good is a tax cut if the government's not cutting spending? The cost of government is not what it taxes, but what it spends. But they want to act like we can cut taxes, but keep spending money, and we'll just print it, and there's no consequences. Well, the consequences are $4 a gallon gasoline, and it's not going to stop there. It can be $10 in a couple of years, $20, and it's not just gasoline. The next major category of consumer good prices that are going to explode is going to be apparel. You're going to see a big increase in airfares. That's going to be huge. But then apparel, and it's going to go across, and eventually even consumer electronic prices are going to start to rise. Prices that Americans are accustomed to seeing fall. Even these prices are going to start to rise. But we've got to do something to restore some sanity here, because the real risk is to more of our civil liberties. What is the government going to do? I mean, I'm in the business of helping people invest their money outside the United States. I think I might be able to have 2 or 3 more years of doing it. I think the government's going to put a stop to it. I think they're going to have capital controls, because once the average American wants to get his money out of the dollar, the government's not going to let him. The government's going to try to stop it. The government's going to say, okay, you can only get maybe $5,000 a year out of the dollar, or $10,000, something like that. But they're going to try to stop the flow of funds out of the currency, rather than trying to restore some value to it. But of course, what did Volcker have to do? Right? When Volcker came in 1980, what did he do to stop the dollar from collapsing? He brought interest rates up to 20%. Can we do that today? I mean, back when Volcker was around, we didn't have any adjustable rate mortgages. The national debt was financed with 30-year Treasury bonds. Now it's financed with T-bills. And instead of owing it to ourselves, we owe it to the Saudis, and we owe it to the Chinese. Can you imagine if we have to pay $2 trillion a year in interest? I mean, that's more than we collect in income taxes. I mean, it's impossible. We've gotten ourselves into a situation now where the cure will also kill us. But unfortunately, we got to do it. I mean, there's no way that we can get back to a viable economy without a severe recession. It's just impossible. But the risk is that we have something much worse. The risk is, in an effort to save us, we end up getting a hyperinflation where we destroy the value of the dollar. And the economy really collapses. I mean, we could get something worse in the 1930s. As I said, the Depression wasn't a result of the failure of the free market. It was all the interference, first by Hoover and then by Roosevelt, to try to lessen the pain. It's exactly what Congress and the President is trying to do now. How can we try to keep these Wall Street problems from spreading to Main Street? Well, they can't. I mean, the problems are on Main Street. That's why Wall Street is in trouble. because they've loaned so much money to Main Street can't pay it back.